Thank you. There are different reports from different capitals about the meeting on Monday and who is going to do what. I can tell you that to have a OPEC Plus meeting and hopefully to have a constructive agreement is a good start. But even the amount of oil, people are speculating, the cut about 10 million barrels per day as a result of a meeting on Monday is successful. It is not going to be a solution to the huge problem we are facing. Even there was an agreement, even there was a cut of 10 million barrels per day, still this quarter, as a result of the already huge surplus of supply and, more importantly, big demand decline, free fall of decline, we will see this quarter a stock build about 15 million barrels per day additional. So this effort, which may seem huge in a normal context, cut of 10 million barrels per day, is far beyond being enough. And therefore, my suggestion, I talked with several ministers today, including the Saudi minister. My suggestion is to bring all the relevant parties together, not only OPEC Plus countries, but all the relevant parties, producers and consumers together. And since Saudi Arabia is the president of the G20, to organize a special G20 meeting on this very issue, as the oil stability is very important for the economic stability. This was my hope and suggestion to Saudi Arabia. And we all know that Saudi Arabia has been a country which had to stabilize the oil markets in the past several times. And I hope to see once again Saudi Arabia shows its leadership as the president of G20 this year and brings all the relevant parties. And this would give a very strong signal, both in terms of the political signal and also in terms of volumes.
Well, this OPEC Plus meeting is an open one. Anybody is welcome to attend, Fatih, so I think that cry has already been heard. How much of a production cut would be necessary to bring prices even up to $30 a barrel, given that they are not at $30 a barrel, at least for WTI, even with the idea that there might be a 10 million barrel a day cut priced in? Because that's a massive reduction percentage-wise to many of these countries.
So first of all, I should say the OPEC Plus meeting is open to everybody, is a bit different in terms of giving a political signal compared to having a G20 meeting, having all the producers and consumers, queue of them together. Second, in terms of the how much cut needs to be done, I can tell you that there is, even the 10 million barrels per day, there will be an increase of the stocks about additional 15 million barrels per day. So we have to make some moves, both in terms of the further production cuts and try to find ways to give a lifeline to demand. At least, and this quarter, the second quarter, is the most critical quarter in this context.
Mr. Birol, there is a meeting taking place today at 3 p.m. in Washington at the White House with oil executives. One of the things that is likely to be discussed is the United States putting tariffs on Saudi crude. Is that a good idea, a bad idea? What would your advice be?
I can tell you that I also talked with the U.S. Secretary of Energy. He is all the ministers around the world is concerned as his counterpartners around the world. Of course, I don't know what kind of decision that meeting will bring, but I can tell you that many companies in the United States already decided to cut their spending. As a result of that, we may well see that there will be a potential loss of U.S. production this year, a significant potential loss of U.S. production as a result of shutdown of the, and also cuts from the new wells drilled. So U.S. is already making some contribution to the cuts around the world.
What do you think about tariffs on Saudi crude, though? Do you think the United States has a case to make at this point for putting such tariffs on Saudi crude, considering it was the Saudis that made the decision to basically crash the price of crude?
I think today is the day that we have a constructive dialogue between all key countries around the world, and it is the very reason I believe to provide a forum to bring countries like United States, Saudi Arabia, Japan, UK, and the others together to sit around the table in the G20 context and to find the best way out for everybody. In this context, neither producers nor consumers benefit from this very situation. Everybody loses. Therefore, why we have a G20 is that to ensure the stability and continuity of global markets. It is the job description of G20, and it is the very time that the G20 intervenes, and the presidency has the role here.
Fadi, we're going to leave it there. Thank you very much indeed for your time as ever. Fadi Birol, the Executive Director of the IEA, the International Energy Agency. Let's turn to the situation here in Europe. Finland's central bank governor Olli Rehn says Europe needs continent-wide fiscal action to counter the effects of the virus. He spoke exclusively to Bloomberg's Roger Hearing and Nera Cehic.
This time, now the action is essentially needed from the member states and from the European Union political decision makers, in a sense that we need a strong fiscal policy response in parallel with a strong monetary policy response. Fiscal policy, if directed rightly, then it can have a very substantial impact on the real economy, and quite quickly.
Yes, just to stick with the monetary policy a moment, Olli Rehn, and on the topic of taking further action, does having PEPP with essentially no limits on how much debt you can buy remove the need for launching outright monetary transactions?
These are not alternatives, and I would not like to speculate at this stage whether we would need to use the outright monetary transactions or not. It is one part of our toolbox. And as you may recall, or you may read from my book, it was a critical decision in August, September 2012, following Mario Draghi's now legendary speech in London during the Olympic Games in July 2012, when he said that within our mandate we will do whatever it takes to ensure the future of the euro. So then the OMT was the tool, but you may recall that that also requires a program under the European Stability Mechanism, and this seems to have been rather contentious among the member states in their discussions recently.
Will they come to an agreement on that, Olli Rehn?
I think the most urgent thing to get to an agreement is a fiscal policy, a coordinated and strong European fiscal policy response.
Olli Rehn, looking further ahead, I mean, when this crisis is over, do you think there are going to be long-term structural changes in terms of consumption, supply chains, even inflation as a result of this in the euro area?
Nobody knows, but everybody is thinking and talking about that, and rightly so, because we have to start, apart from the acute policy measures, crisis measures, we have to start thinking about the exit from the crisis. And one issue which is certainly of matter of concern is that we all are going to pile up quite a lot of public debt. But on the other hand, that's worse of a problem if it is one of than letting the whole national economy or European economy fall with bankruptcies and mass unemployment.
Olli Rehn, very briefly, should there be private debt cancellation, as Mario Draghi suggested in an FT op-ed?
I didn't read it as straightforward as you propose, but we will have to think about how we will deal with the massive problem of private and public debt.
That was Finland's central bank governor Olli Rehn speaking to Bloomberg Radio a little bit earlier on today. We are counting you down to the end of the week here in Europe. Just in terms of what we've seen in the performance today from the Stock 600, which is not doing too badly considering what's being thrown at it right now. Today, healthcare, retail, financial services are higher. Every other sector is in negative territory. You've got oil and gas down by over 5%. If I take a look at what's happening on the week, though, it's a very different story. The oil and gas sector is up by 8%. You've got healthcare up by 5.5%. At the bottom end of the pile, though, in terms of what we've seen on the week, we've got 11% down for the banking sector, the travel and leisure sector, very much under pressure as well. But in terms of the 5-day performance for the Stock 600, let me tell you how we performed. We have been actually looking all right relative to kind of the last few weeks. We are absolutely flat, really, on the week, down by less than 1%. The European closes next. This is Bloomberg.
In San Francisco, a lot of tech action today.
Our top stories this morning in D.C. and
the Dow and the S&P.
Shall we? So the euro on a 7-day
sizable moves in the currency market, which is down 0.5%.
We begin in the oil patch. Saudi Arabia.
Brent crude, pretty much unchanged.
Welcome to Bloomberg, the first word Asia.
The U.S. and Japan duke it out over exchange.
China's slumping onshore bond market is great.
I hope that banks will follow, and we have seen other banks following the ECB recommendation this morning. Besides UniCredit, I think it's important for banks to be here to support the economy. Banks are part of the solution.
So we're wrapping up the week here in Europe. 30 seconds to go until the end of regular trading. Let's take a look at what the numbers look like and how the session has developed. We'll deal with today and we'll deal with what the week has looked like. Let's start off with today. actually, in many ways, considering what's been thrown at the market and the fact that we're going into a weekend, actually a 1% down day for the Stock 600 can be considered something of a less off. The payroll number coming out of the States was bleak and probably underestimates the true impact of what is happening to the US economy. The PMI data out of Europe were bleak and, again, probably underestimate the true impact of what is happening over on our side of the pond as well. But we finished just off session lows, trading at 308 spot 83, the 300 line. Quite important right now, down by around 3 points. Let's take a look at it on the week, actually, just to give you an idea of what is happening here as well, just to tell you what the picture looks like. And I'll actually then dig into a little bit more detail. On the week, the Stock 600 is only down by 0.6%, but there are some quite big regional variances. The CAC 40, for instance, was down by 4.5%. The London market, the FTSE 100, only down by 1.9%. The DAX only down by around 1.1%. So some big regional variances, and actually you're getting that in the data as well. Some individual markets today. Let's just show you what is happening, just to give you an idea of how the picture develops in the FTSE, the CAC, and the DAX on today's session. These are the numbers we're looking at. This week, the CAC 40 has been a big underperformer, as I say. The reason for that, Natixis down very hard, Airbus, Safran. These are the kind of companies that have had a big impact on the downside for the CAC 40. The FTSE 100 has suffered as well. Names like Cineworld and Rolls-Royce down, but they don't have the same kind of weighting as we've seen in terms of the names that we've seen dragging down the CAC 40 over in Paris. In terms of what we've seen on the volatility story, again, I think this is just worth mentioning too. We have seen some fairly big differences in terms of the volatility picture around the world, but we are continuing to see the daily swings dropping. And as you can see, we've continued below the 50 mark. We're now trading at 48.88. So the downward trend in volatility is, to a certain extent, reasonably good news. In terms of some of the movers, as I say, the big moves on the week, Airbus, Natixis, Carnival, all trading down reasonably sharply. But in terms of the big mover this week, it has been the energy sector. On the week, up by 8.74%, but down today. It's actually been the worst performing sector here in Europe today. Bonnie, over to you.
Well, we are seeing a little bit of a deterioration. This did come after we got the uptick in deaths, 562 deaths in New York in the last 24 hours. So very definitely the trajectory is in one direction here in the United States. The Dow is down 1.6% now, just 3 companies higher in the Dow. Boeing, the highest, up 2.4%. The lowest is Raytheon Technologies. It is down a whopping 41% today. The S&P 500 is down 1.4%. Really, all the major groups in the S&P 500 are lower. I'm just checking to see that that's still the case. Yep, we are even seeing the pharma and bioceuticals index down about 0.33%, and the Nasdaq down 1.2%. After the jobs data, which was a surprise but also not a surprise because we just know how many people are going to be signing on to the rolls in the next few weeks, the 10-year yield is at 58 basis points. We'll be expecting developments in oil in the coming days. 26.68 is where we're at now on WTI, and the dollar index is inching closer to that 101 level, Guy.
Absolutely. Definitely worth paying attention to what is happening with the dollar and the stresses that we've seen. Vonnie, the UK, as you just mentioned, the US data just reporting its deadliest day yet. 684 coronavirus cases. The European economy continues to be hit as a result of what we're seeing. Down by around sort of 10%. Let's get some details on what is happening. Joining us now on the phone, Bloomberg's Paul Gordon. Paul, we've seen some PMI data out today, and what really is kind of standing out to me is the fact that we are getting really big regional variances, depending on to what extent economies are being shut down. Kind of Italy at one end of the spectrum, some of the Nordic countries at the other end of the spectrum. How is it possible to set policy and deliver sort of a common fiscal response when this is the case?
It's extremely hard, is the answer. You do need to focus on the countries which are worst hit in many ways. Certainly, European Central Bank monetary policy has started doing that, obviously, not explicitly, but obviously obviously still buying Italian debt to try to keep Italian bond yields down. That's a reflection that Italy is going to be spending a large sum of money to try to revive its economy in an already debt-burdened nation. The Nordic countries outside the euro area, for the most part, of course, will take their own steps, and Germany is doing its own steps as well. But I mean, the numbers here, Guy, they're bad. They're so bad that the actual numbers are almost irrelevant. Italy's PMI was 17.4 for services, less than half as much as we saw during the financial crisis. But what it means is the economy is basically ground to a halt, and it's very hard to deal with that.
Paul, anytime we speak to, guests in the markets, they seem to think that at some point there will be mutualized debt, whether it's a Corona bond or eventually maybe a Euro bond. I mean, does anybody in Germany believe that that's the case?
Well, Germany is one of the holdouts, not the only one. It's often said that the European Union only makes its needed reforms in a crisis, and this is certainly a crisis. Now, Euro area finance ministers are meeting next week on Tuesday. There are high hopes that they'll come up with some kind of an agreement on some kind of mutual plan. It's unlikely, I would guess, to be mutualized debt, Corona bonds, as they're often called, Euro bonds, as they used to be called, because of the concerns in places like Germany that they'll end up taking on the burdens of weaker economies. There's a lot of hurdles still to get over on that.
Just in terms of trying to get an understanding of what is happening in Germany right now, a little bit more specifically, Paul, we now have a situation where the German finance ministry is talking about aid to small businesses and maybe some sort of a stimulus program further down the road. Germany looks sort of very well set up in some ways to be able to handle this crisis. So I'm really curious as to what is happening at the heart of Europe. The relationship between the Mittelstand and the Sparkassen and the regional banks, how is that functioning right now? I'm curious to know, because it could be a model for others elsewhere as we try and understand how we come out of this and how we protect small businesses going forward.
Yeah, I mean, some of the measures that Germany has been able to put in place have been there for a long time. The Kurzarbeit is the famous program, short-term work or furloughing. We've seen the problems that the UK has had trying to get a scheme like that up to scratch, where you pay workers even though they can't go to work. Germany's had that for a long time, so that's been functioning quite well. The aid to small and medium-sized enterprises is newer. The latest program will be 300 billion euros. It's a big program. But you're right. I mean, there's this issue in Germany that the small and medium-sized enterprises, heavily bank-reliant, much more so than in the US, where capital markets play a bigger role. They're a very big part of the economy. And they do have a certain amount of reserves, but they're going to run into the same cash flow problems that companies all over the world are at the moment. The fact that Germany has a budget surplus and it has the money to fund these schemes is proving a plus, as some politicians and as the head of the Bundesbank have pointed out recently, and that helps it in an unexpected crisis.
Paul, great to speak with you today. Paul Gordon there of Bloomberg News speaking to us from Germany. Now, let us get to the first word news. For that, we'll get to Ritika Gupta.
Thanks, Bonnie. The price of oil is surging today. OPEC Plus has scheduled an urgent meeting next week to try to end the market's collapse. And Russia's oil industry is ready to agree to production cuts. Along with Saudi Arabia, there's a 10% global output cut being discussed. The coalition will hold a meeting by video conference on Monday. In Spain, the death rate from the coronavirus has declined for the first time in 4 days. The Spanish reported 932 fatalities from the disease in the last 24 hours. The death toll there now is approaching 11,000. It's been 1 week since British Prime Minister Boris Johnson tested positive for the coronavirus. He still has a high temperature and remains in isolation. Johnson appeared on his doorstep last night to join in a mass round of applause for healthcare workers. After being stranded at sea for 3 weeks, passengers on a Carnival cruise ship that was refused entry by multiple countries began disembarking in Fort Lauderdale, Florida today. That after 14 critically ill people were removed, then taken to Florida hospitals. Some passengers with mild symptoms were told to quarantine on board for now. Global news, 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy?
Ritika, thank you very much indeed. European markets now closed. These are the final numbers. In terms of the weekly performance that we've seen, most markets down. The CAC underperforming by some considerable margin, down by 4.5%. But European markets now shutting up shop for the weekend. Will return Monday following what is likely to be a few difficult days in terms of the news flow. These are your final numbers. Not much action actually during the auction process. The FTSE down by 1 1/3. The DAX outperforming a little bit, only down by 0.5% today. The CAC Iran down by 1.6%. We'll carry on the analysis at the top of the hour. We'll take to the airwaves on DAB digital radio in the London area with the cable show on Bloomberg Radio. John Burrows over in New York. I'll be joining him here in London. We'll have the usual UK daily briefing. Plus, we'll probably play some of John's interview with Larry Kudlow, which was conducted a little bit earlier on. This is Bloomberg.
Live from New York, I'm Vonnie Quinn along with Guy Johnson in London. This is the European close on Bloomberg Markets this Friday. Well, with medical resources being stretched to the limit, ZocDoc is introducing a new program to help with the demand for doctor appointments. Joining us now on the phone is CEO of the private company ZocDoc, Oliver Carraz. Oliver, tell us about this new program. It's not just about placing patients with doctors, is it?
It is a new service that we call video visits, which allows a patient to select a doctor and see them remotely and completely safely. We've added very significant capacity to the telemedicine supply in the country, making 350,000 video visits available as of today. And those are delivered by over 3,500 ZocDoc providers across more than 50 specialties.
That's wonderful, Oliver, and hopefully it will be of great service to people, particularly at a time like now. And it's at a time like now that your service should be becoming very, very valuable. Before all this happened, you were valued at $1.8 billion. I'm curious as to how you're looking at the valuation of your company now.
Well, to be honest, I'm thinking about how we can step up to the responsibility that we have to make the system more stable. If you think about the structural issue that we're facing is that on a regular day pre-COVID-19, we had 3 million patients who saw their doctor in person. The government has recommended that these patients see their doctors through telemedicine, but there just isn't enough capacity. So our primary focus right now is on helping to fill that gap.
Of course.
Oliver, just in terms of the way it operates, I'm curious, are diagnoses as good when the meeting is virtual as opposed to seeing a doctor face-to-face?
I think it varies dramatically as to what your underlying issue is. Clearly, if you were intending to see the dentist, that is much more difficult to do through a telemedicine visit. But what we have seen is actually a very robust demand in things like primary care, OBGYN, ENT, gastroenterology, and in particular, mental health has been in large demand by consumers.
Just in terms of how you interact with the patients, I read on an almost daily basis, probably less so now, but certainly in the past, about the advances that are being made by companies like Apple and Google in terms of health monitoring. The technology is improving all of the time. How are you incorporating that? And kind of, is that changing the way that we are going to be able to interact with doctors? If they can tell remotely what our blood pressure looks like in terms of our EKG, all of these kinds of factors that a doctor would normally take and can now increasingly being done remotely.
I think that's obviously a great progress that's being made on the clinical end of this, but one of the things that is true about healthcare in the U.S. is that we are failing much more basic parts of the healthcare system, just like getting in to see care on a regular day pre-COVID. The average wait time from picking up the phone and dialing for doctors to try and get a doctor's appointment was over 3 weeks, in which case many patients ended up going to the emergency room or getting care in other suboptimal venues. What ZocDoc has been focused on for a long time is to actually surface the hidden supply in healthcare, surface the doctors that can see you in office much sooner. The typical appointment would happen within 24 hours. And I think the conjunction of actually getting timely care in the appropriate venue and having the appropriate data and technology available to the doctors that see you, that's where I believe a lot of progress for the U.S. healthcare system can be generated.
Doctor, I do have to ask you as well if you've had to make any changes to your workforce and if you've applied for the PPP, which was opened up today.
So we have not made any changes to our workforce. In fact, we're still hiring. We are still considering and trying to understand better the details of this program.
So you have not, but you may. Is that correct?
We may. Truthfully, we're working around the clock to understand the program more completely.
All right, Doctor, thank you and very best of luck. Wonderful company to be running at a time like this. Dr. Oliver Karas, the CEO of ZocDoc. Time now for the latest Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. Bank of America says 500,000 of its 66 million customers have deferred payments because of the coronavirus impact. CEO Brian Moynihan told CNBC the bank is working with customers who are trying to preserve their cash flow. Airbus is set to cut back production of its best-selling A320 jetliner. Bloomberg has learned the reduction will be significant. Airbus's final decision will take into account the financial health of ailing airline customers. Shares of Tesla are surging today. The electric car maker's first quarter sales came in better than expected. Elon Musk introduced so-called touchless deliveries last month. That came at a time when authorities were urging would-be car buyers to stay at home. And that is your latest Bloomberg Business Flash. This is Bloomberg.
Live from London, I'm Guy Johnson with Vonnie Quinn in New York. This is the European Close on Bloomberg Markets. OK, US employment plummeted last month, the first decline since 2010. Bloomberg's John Furrow spoke with National Economic Council Director Larry Kudlow a little earlier.
The president has been in touch on the phone with MBS in Saudi Arabia and Putin in Russia. He's been on the phone several times. Other people in the administration have been talking to their counterparts in both of those countries. So we do that independently in America's interest. We don't have to go to the OPEC meeting. The president told me yesterday, and he did subsequently tweet this out, that he believes that Russia and Saudi Arabia will move away from their quibbling or argument and will allow market forces to dominate, and instead of loading up the markets that are already oversupplied, that they will pull back. We will see how that turns out. The president said that. Oil prices have gone up quite a bit, $7 or $8 since that statement. I see no reason why these discussions with President Trump and Putin and MBS will not bear fruit. I think they will. I think flooding the market with oil on top of the pandemic, which has crushed aggregate demand, was a very, very poor decision by both of those countries. But I think the president's negotiations will bear fruit.
Larry, will the United States be part of those production cuts?
Well, look, our oil, we don't dictate oil policies to our oil and gas sectors. They're smart businesses. The U.S. is still the number one energy producer in the world, and we expect to remain so. We've taken a number of policies to open the door and permit that to happen. We don't dictate. I think, as you would guess, oil companies seeing a decline in price are going to pull back in production. I think that's just common business sense. But we don't dictate those decisions. The government doesn't dictate those
Larry,
decisions.
just a final question for you, just to jump in. I know you've got to run. You've got a busy morning. I appreciate that. But as a final question, on a day when these small business loans are going down, on a day where Americans are struggling to pay the bills, can you communicate to a broader audience as to why there is such a big focus on the oil market and meeting with oil producers today?
Well, look, first of all, I'm looking forward to the meetings today with the oil producers. I myself have done a number of conference calls with the oil and overall energy sectors. You know, let me just insert this. The degree of public and private, government and private partnership here is unparalleled. We have worked with every industry, and the president has, seen them in person or done conference calls, and the rest of us have done conference calls. So that's point number one. Point number two, energy is obviously a key part of our economy. It was a key part of the tremendous economic growth we had in recent years before it was interrupted by this pandemic. So it's important. Motorists, people who get heating fuel, gasoline prices, all that is very, key parts of American life. So we always take an interest. But I will say this, regarding any collusion attempts by other countries in and or out of OPEC that seem to be doing damage to American interests is something that President Trump will get engaged with right away to protect the American economy. That's what we're doing here. This is, we talk about paycheck protection for small businesses and to avoid layoffs. Yeah. Well, this is just general economic energy. I mean, we have to stand up for American interests. That's what the president has done. Energy is a key part of the economy. So to me, it's an American operation. That's what we're concerned about.
All right, that was National Economic Council Director Larry Kudlow speaking with our own Jonathan Ferro. Coming up in the United States, Balance of Power with David Weston on Bloomberg Television and on Bloomberg Radio. Stay tuned. Full coverage for the next 2 hours with Balance of Power. Later on, we're also going to be speaking with Tom Colicchio of Crafted Hospitality. He's going to be telling us about his efforts to apply to the SBA PPP program. That's coming up at 1:40 Eastern. This is Bloomberg.
special coverage of all the price action and implications here on Bloomberg Television.
Commodity investing is more than buying gold and oil. From coffee and corn to cattle and natural gas, many sectors drive the commodity markets. And the Bloomberg Commodity Index covers them all. With exposure across 23 traded commodities, Bloomberg is the standard for diversification in commodity markets. With full transparency, measure and monitor your investment performance against the benchmark used by commodity professionals globally. More than gold and oil, the Bloomberg Commodity Index.
Even in a circumstance where you're down 80% of the rest of the year, we're still going to have $4 billion of cash. We're going to have access to a $2 billion revolver. We think it's highly, highly, highly unlikely, but we are planning for the worst case.
Radio audiences worldwide. This is Balance of Power, where the world of politics meets the world of business. I'm David Weston, and we want to start out with the market check before we have a very special interview with the CEO of the new Raytheon Technologies. But for the markets, we go first to Taylor Riggs.
Yeah, let me get you caught up on where we are within the major averages in crude. We were fluctuating earlier this morning between gains and losses on that pretty bad employment report that we got this morning. And so all of that sort of means that we are now down near the lows of the session, off about 1.5% or so on the major averages. I would say perhaps that traders really don't want to be long going into the weekend, given how quickly things can change. You just had New York reporting the biggest one-day jump of deaths from the coronavirus. Crude, though, of course, is bucking that trend. They're one of the big outperformers. It's up 30% in the last 2 days, all on reports that OPEC Plus and Russia have signaled that they do want to try to cut output to help restore some balance going on, at least on the supply side of things. So crude, of course, having a pretty good start to the second quarter. I do want to flip up the board and fold that over into some analysis that we heard this morning from Mohammed Al-Arian between the risks of the high yield market and the investment grade bond market, David. He is saying, really, beware of fallen angels here. There is a real risk of some of these BBB credits being downgraded to junk. One of the biggest risks in credit is that it spikes way beyond the Fed's tolerance. So again, you buy what the Fed is buying, but do be careful of these fallen angels. And we saw, just a slew of those really in the last week. I think strategists are arguing that it really could get a lot worse from here, David.
opportunity, we were able to give a big push to develop our catering business. So that is something that we think we'll continue to work on.
This is Bloomberg Markets Balance of Power. Earlier this morning, we did speak to Larry Kudlow. He's the National Economic Council Director. Let's listen in to what he had to say. Let's listen in to Larry Kudlow. Let's take a look at some of the market. Let's get a check there on what you're seeing in the markets. As you can see, we're off down to the lows of the session here. We're off about 1.5% or so. As you can see, we're off here on the lows of the session here. We're off about 1.5% or so. We were hearing that no one really clearly here wants to be long going into the weekend. You do have New York is coming out. They're reporting some of the biggest one-day jumps. I think we are having some technical difficulties here. We are hearing from the National Economic Council Director Larry Kudlow. Let's listen into him.
The president has been in touch on the phone with MBS in Saudi Arabia and Putin in Russia. He's been on the phone several times. Other people in the administration have been talking to their counterparts in both of those countries. So we do that independently in America's interest. We don't have to go to the OPEC meeting. The president told me yesterday, and he did subsequently tweet this out, that he believes that Russia and Saudi Arabia will move away from their quibbling or argument and will allow market forces to dominate, and instead of loading up the markets that are already oversupplied, that they will pull back. We will see how that turns out. The president said that. Oil prices have gone up quite a bit, $7 or $8 since that statement. I see no reason why these discussions with President Trump and Putin and MBS will not bear fruit. I think they will. I think flooding the market with oil on top of the pandemic, which has crushed aggregate demand, was a very, very poor decision by both of those countries. But I think the president's negotiations will bear fruit.
Larry, will the United States be part of those production cuts?
Well, look, our oil, we don't dictate oil policies to our oil and gas sectors. They're smart businesses. The U.S. is still the #1 energy producer in the world, and we expect to remain so. We've taken a number of policies to open the door and permit that to happen. We don't dictate. I think, as you would guess, oil companies seeing a decline in price are going to pull back in production. I think that's just common business sense. But we don't dictate those decisions. The government doesn't dictate those
Larry,
decisions.
just a final question for you, just to jump in. I know you've got to run, you've got a busy morning, I appreciate that. But as a final question, on a day when these small business loans are going down, on a day where Americans are struggling to pay the bills, can you communicate to a broader audience as to why there is such a big focus on the oil market and meeting with oil producers today?
Well, look, first of all, I'm looking forward to the meetings today with the oil producers. I myself have done a number of conference calls with the oil and overall energy sectors. You know, let me just insert this. The degree of public and private, government and private partnership here is unparalleled. We have worked with every industry, and the president has, seen them in person or done conference calls And the rest of us have done conference calls. So that's point number one. Point number two, energy is obviously a key part of our economy. It was a key part of the tremendous economic growth we had in recent years before it was interrupted by this pandemic. So it's important. Motorists, people who get heating fuel, gasoline prices, all that is very, key parts of American life. So we always take an interest. But I will say this, regarding any collusion attempts by other countries in and or out of OPEC that seem to be doing damage to American interests is something that President Trump will get engaged with right away to protect the American economy. That's what we're doing here. This is, we talk about paycheck protection for small businesses and to avoid layoffs. Yeah. Well, this is just general economic energy. I mean, we have to stand up for American interests. That's what the president has done. Energy is a key part of the economy. So to me, it's an American operation. That's what we're concerned about.
You have been listening there to Larry Kudlow. He's the National Economic Council Director. We are working to get David Weston back for you as well. We will have much more next. This is Bloomberg. It is Jobs Day here in the United States, and the country lost 700,000 last month. That's even before many of the lockdowns around the country went into effect. I'm now here with our Bloomberg economics policy correspondent, Michael McKee. Michael, what was the initial reaction? Because this was a lot worse than most economists on the street had even predicted.
Yeah, it's been funny because the markets basically looked at this and went, yep. We're surprised that it came so early, but that the depth of the cuts is no surprise. And this is only an appetizer for what's going to happen in April. And I don't really want to call it an appetizer because it's going to be horrendous. We're going to see tremendous losses. I've seen early forecasts that range between 10 and 20 million. We've never had anything like that in the past, and it's just going to be crazy. And so most traders are telling me, I'm not even going to trade this. I'm not even going to worry about the economic data. I know it's bad. I know it's terrible. I'm hoping it's temporary. So there's no reason to respond to each individual data point.
It's really hard to understand how economists can even begin to forecast because, like you said, this is unprecedented. So we've heard calls for 5% unemployment, 10%, 20% unemployment. Is there even a consensus here on Wall Street when we get to the April, for example?
Well, there's sort of a consensus on the unemployment rate in that you can extrapolate out from the jobless claims numbers, and you can do some math on it. You have to fudge a little bit because there are people who are unemployed who will not be claiming jobless benefits because either they think they're not eligible or they just don't get around to it. There's also the aspect of if the lending program that in theory starts today, the Paycheck Protection Program gets into place and companies can start putting people back on their payrolls because they have a loan from the government, that may take some of the unemployment out. But right now you're looking at anywhere between 10, 15, 16% unemployment in the April report, just based on the numbers we have so far. We'll see what happens with jobless claims through the rest of the month. The overall payroll numbers, who knows? That's why the dispersion's so broad between 10 and 20 million. You've got sort of automated models that are trying to guess at this, and there's almost no way to do it.
Are initial jobless claims now the most important data because that's given us more real-time data, perhaps, than these monthly reports?
That's what everybody's looking at, is the real-time number of people who have been laid off. Even those are a little distorted because we don't know how many people haven't been able to file because their local office is overwhelmed, and we don't know how quickly the states are being able to process these. We had 200,000 jobless claims for several years, basically. So states put off modernizing their systems. They let a lot of people go. They didn't need extra bodies to process all these, and so they're completely overwhelmed. And you look at some states, like New York, reporting very low numbers compared to others, and you got to figure that's just because they can't handle it, and we're going to get this deluge in coming weeks.
What are we hearing about some of the small business loans that were effective at midnight on Friday? You've heard a lot of banks say there was perhaps some confusion. We know that it's been up and running in record time. It only took a week, but still there are, I think, a lot of concerns about small businesses being able to go to the banks and actually get loans. What is the execution of all of that looking like?
Well, right now it's not looking good, but that's just based on anecdotal reports. We don't have any kind of overall look at how it's going. But going into this, a lot of small business people, and of course reporters following up on what they were saying, were reporting that banks were having trouble getting set up, in part because they didn't have complete instructions from Treasury and the Small Business Administration, and in part because there were unanswered questions like, if somebody commits fraud, who's on the hook for that? If somebody takes out a loan that doesn't deserve it, does the bank have to pay it back, or does the federal government have to pay it back? Also questions about how much additional lending banks are going to be allowed to do under the federal regulations. So all that had to be worked out. Now, part of the problem is the Treasury Department and the administration has come out with this sort of artificial deadline. We understand why. There's a lot of pain. They got to get this out there as quickly as they can, but they say it's going to run by Friday. Well, then you got to make it run by Friday because everybody's waiting for it to run by Friday. And I could have told you this wasn't going to work immediately. Anybody could tell you something this complex is going to go through a lot of problems. And perhaps the best example of this was Obamacare. When they first rolled out Obamacare back in 2010, the website, you remember, crashed. Everybody had all kinds of problems. Everybody said this is a big failure. But then it got up, it got running, it got working, and now people think of it as a big success. So that's probably what's going to happen here. Give it a few days for the kinks to be worked out. The banks want to make this work. They just have to have the right guidance, and they have to have enough time to get their systems programmed and get everything in a row so it does work.
I want Michael McKee to stay with me, and in the meantime, I want to bring in Michelle Meyer here. She's head of U.S. Economics at Bank of America Securities. Michelle, what is your initial take on the unemployment numbers that we got this morning? Is this just really the beginning of what is going to be a long, tough road ahead?
I think that's exactly right. It will be quite a challenging road ahead, as Michael noted. Significant job loss in March, and what stood out to us is that the survey period is the pay period containing the 12th of the month before a lot of the government lockdown measures went into place. And there was also a bit of a disconnect between the establishment survey, which gives you the payroll numbers, versus the household survey, which gives you what individuals are saying. And when you look at the household survey, what individuals are saying, they're saying that there's been a pretty extreme number of job cuts that happened in the beginning of March. So temp layoffs were very, very high, and people who were just reporting that they were unemployed or marginally attached to the labor force was very, very high as well. So there's more to come. This is just the very beginning, but it does highlight the severity of this downturn.
Michelle, it's Mike. You put out a note after the jobs report came out that said that you expect 16 to 20 million people will lose jobs over the next couple of months. I can't let you just get away with a couple of months. Can you give me an idea of what you think April is going to look like and how you're coming up with numbers in this kind of model fantasy world?
Yeah, so in our view, the bulk of the weakness will be in April. It'll be heavily concentrated in April with some residual declines in May. And the way we come up with it is really using the jobless claims figures. So as you noted before, you have to make assumptions for the people who are reporting for jobless claims that aren't necessarily going to be officially unemployed. There's different surveys that we have to account for and measurement complications. So taking all of that into consideration, you can extrapolate forward and come up with a sense of the total amount of job loss. And again, it looks to be quite significant. And it shows you how big of a shock this is and how unprecedented this is. Parts of the economy were put into hibernation all at once. And as a result of that, you're seeing severely, large changes in economic output and jobs. Think about how all of these time series charts are going to be adjusted. They're all just level setting right now in a way that we've never seen before.
Michelle, I'm really wondering how much of the job losses could be permanent. The longer this goes on, I think the more worried businesses get, the more worried consumers get. What is the impact if a lot of these jobs that are lost don't come back?
There is quite a lot of concern about that, and I think that is the right question to ask, because we could do the estimates in terms of people who are temporarily employed because businesses are shutting down, and then you can say, okay, so, well, once they are cleared, they can open back up, and a lot of these people will come back to work, but not all. You have to imagine that there will be a lot of frictions in terms of being able to hire back. If people are out of the workforce for a few months, it becomes they become a little bit detached. Businesses, once they do open, they'll probably be thinking about what this new normal looks like. How many workers do they need? What kind of workers do they need? How much are they willing to pay? So no, it's not going to be the case that you just flip a switch and all of a sudden everybody who was employed goes right back to work at the same pay. It's going to be a lot more challenging than that, especially the longer this persists.
Let me ask you a question that I've been asked, and I don't know if you have a good answer, but you've got a lot of analysts who are in touch with various businesses around the country. People are wondering how many people are actually able to work at home. What percentage of the labor force is stuck because they can't get out to do their jobs, and what percentage might be working?
So you can get a good sense of that actually by looking at the industry level jobs numbers. So if you break down the jobs figures into the types of jobs available, so think about leisure and hospitality. They cannot work from home. Retail trade, the majority of those workers also can't work from home. Some of the transportation workers can't. So you can actually get a decent sense of that share. And by our estimates, about 25% or so would have a very hard time working from home or unable to work from home. And then beyond that, the efficiency level of people working from home will vary depending on what industry they're in.
Michelle, I was asking Mike this question earlier about banks trying to roll out the small business loans today that went into effect at midnight. There has been a lot of concern, though, from some of the banks about how to execute this, how to implement this. Do you have any idea, and we know it was put into place in record time, and so you want to give credit where credit is due, but do you have any sense of if this thing doesn't roll out really in the next few days, what the long-term implications of that could be, given these small businesses, frankly, need cash more so than the large corporations at this point?
So I think one thing is very, very clear is that the goal of policymakers right now is to get credit to flow through the economy, both the financial system, which the Fed is very focused on, and also the real economy, which Congress in Washington is focused on more broadly. So the direction of this policy is absolutely right to try to get funds where they need to be, especially with the purposes of maintaining payrolls. But there is, of course, a question of how quickly that happens, the dollar amount, and all of that. We'll just have to wait to see how it plays out in the economic data.
You came up as a third baseman, actually. You came up as a housing specialist. So I want to ask you a question about housing in this whole thing and the rescue package. There was nothing in there for servicers. And if I don't pay my mortgage, then the servicer, in theory, is responsible to pay the investors. What's going to happen to the housing market? Are we worried that we might get a freeze up here?
So the one thing I would say about housing this time around relative to the prior cycle is that the fundamentals heading in are so much better. You know, if you look at average loan size, it's been larger, right? People have more equity in their home. So you're not going to have the same risks around defaults or foreclosures because negative equity is a necessary condition to default, right? So if people have a greater buffer, they'll be able to withstand that and stay in their homes a bit longer. You know, so the fact that leverage was lower, I think, is really encouraging. The fact that you didn't have excess building is another really encouraging factor. In the last cycle, you had a whole lot of stock that was going to be forced into vacancy very quickly. You don't have that this time around. If anything, inventory is lean. So I think the fundamentals for housing are much, much more favorable than it was in the last cycle. That said, of course, housing is vulnerable when you have a big economic recession. If there's income loss, there's going to be challenges in terms of servicing debt. So we'll have to see how that plays out. But I do think it's a very different backdrop today than it was in the 2008 cycle.
Michelle, just a final question here. What is the biggest risk that you see in all of your economic analysis?
So to me, the real focus is not necessarily about quantifying the size of the downturn. I think we can all do some sophisticated exercises or less sophisticated exercise in terms of trying to understand how big of a cut we might see. But the big question is, what happens next? What will this recovery look like? What are the structural changes in the economy as a result of this? Which industries might look totally different when this is all said and done? So I think that's going to be the really interesting story going forward. You know, how do we come out of this? And what are the permanent scars as a result? Because there will be.
Our thank you there to Michelle Meyer of Bank of America Securities. And coming up next, we'll talk with Senator Gary Peters of Michigan about the toll the coronavirus is taking on people of his state. This is Balance of Power on Bloomberg TV and radio.
Fuel, corn, livestock, precious metals. Commodities are everywhere, and so is Bloomberg. Bloomberg commodity indices deliver leading benchmarks for true diversification. Adding commodity exposure can help hedge against inflation and diversify your stock and bond portfolios. With full data transparency and broad distribution, the Bloomberg suite of commodity indices is your measure for the commodity markets. With Bloomberg, you've got the markets.
our second and third year, second tier suppliers to make sure that they continue to have the wherewithal when we start up production again. We've got to have a supply chain that's operating and is open, and that means making sure that our smaller suppliers have the resources they need to be able to start up once things start turning around.
Our thank you there to Democratic Senator Gary Peters of Michigan. Now, 3M produces those N95 masks needed so badly by healthcare workers fighting the coronavirus, and it's been ramping up production. But yesterday, President Trump said he was invoking the Defense Production Act directed at 3M. Joining us now on the phone is 3M Chairman and CEO Mike Roman. Mike, talk to me a little bit about what happened. Our colleagues have been speaking to you in the last few weeks. Things felt fine. What happened in the last few days?
Yeah, Taylor, thank you for having me on. Michael, good to be here with you today. I would start here. We continue to do everything we can to fight COVID-19 and support healthcare workers here at home. We've ramped up our production in the U.S. as quickly as possible. We saw this early in January and ramped up production capacity that we keep idle for just these kinds of situations. So we are working to expand that. We're focused on delivering as much as we can in April. And the narrative overnight that we're not doing everything to maximize the delivery of respirators in our home country is false. Nothing could be further from the truth. And the idea that 3M is not doing all it can to fight price gouging and unauthorized reselling is absurd. And we have been at the front lines of really leading this as we've gone through it. So that narrative is, for all the 3Mers that have dedicated so much time and effort to really lead the fight here, it was disappointing to hear that narrative overnight.
It's always hard to know exactly what the White House is talking about, but in this case, it seems that the president heard a report that you are selling some of these masks to Canada and into Latin America, which, as I understand it, has been a common business practice for you.
Yeah, we have, under normal circumstances, we produce about 19 million respirators, 20 million respirators a month in the U.S. 90% of that goes to industrial customers, and a portion of that goes to Canada and Latin America to serve customers there. In a crisis like this, we double that output, and we shift to 90% plus to healthcare, only supporting key industries like pharmaceutical manufacturing or food production. And so we continue to support Canada and Latin America. It's part of our strategy. We have excess capacity to bring online. This COVID fight is like nothing we've seen. The demand is so much greater. So we are trying to do everything we can to bring capacity into the U.S. while we still serve Canada and Latin America, where we are often the sole supplier of healthcare workers in those countries. So we have expanded our capacity. We'll ramp up another 5 million respirators in the month of April. We now have just got agreement to be able to export 10 million N95 respirators from our China manufacturing into the U.S. And so we are stepping up, and we are bringing more production online in June. So we'll get up to 50 million plus what we can bring from China. So we're a net importer into the U.S., even though we continue to serve Canada and Latin America with a small amount of that production. It's less than 10% of our normal production. And so it becomes a humanitarian issue that we have to try to balance, and we are at the same time maximizing everything we can bring to U.S. healthcare workers.
Mike, is there price gouging of some of these masks? How far down the supply chain through the customer, really, are you able to control prices?
Yeah, and on price gouging, it's good to be clear here. We are manufacturing respirators. We sell those to distributors. And in the healthcare crisis, we sell through half a dozen large, reputable distributors, and we have a strong partnership. We work with them to get product where it's needed. Senator Peters' comment about triage, that's exactly what we're doing. We're triaging to serve the most critical need, working with FEMA to ship directly, but also working with our distributors to get there. Prior to COVID outbreak, we were selling to 90% to industrial distributors, and they're selling to a broad range of customers. Some of that inventory has ended up in resellers, and those resellers are where this unethical, despicable behavior of price gouging is taking place. 3M, we have not and would never increase prices for our respirators during this crisis, and we don't sell to the highest bidder. We sell through these authorized distributors or directly to the government, and it's beyond that we go with DOJ and state AGs to really pursue these perpetrators. We bring our data online. We help with counterfeits. We authenticate 3M products. We work with e-tailers to make sure we're calling out those price gouging and resellers. So we're doing everything we can to help law enforcement take that on, and we have a supply chain that ensures in this crisis, and we monitor this every day, it is really a strong way an effective way to get the product to the customer. So that it's disappointing and unfortunate that resellers are out there taking advantage of this situation the way they are.
Our thank you there to 3M CEO Mike Roman. Now, U.S. jobs numbers were even worse than expected today. 700,000 positions were lost in that data, coming before many of the lockdowns and shelter-in-place orders even began. We welcome now Glenn Hubbard, professor of economics at the Columbia Business School. He served as President George W. Bush's chief economist, and he is a contributor to Bloomberg Wall Street Week. Glenn, great to have you. What is your biggest concern as you take a look at the jobs report this morning?
Well, I think in some sense that we knew the jobs report wasn't going to be an accurate picture of where we are now because we've seen such a big increase in unemployment insurance claims. But it was worse than one might have expected. And to me, what that says is that policy needs to focus very much on doing whatever it takes to keep people linked to their employment, things like the Paycheck Protection Program and the CARES Act.
You were early in calling for assistance to companies, particularly smaller and medium-sized enterprises, but you had envisioned a much bigger program. Do you think Congress is going to have to go back and add more to the small business lending program that's in theory getting underway today? Or maybe can the Fed handle it through the Main Street program once they start leveraging up the Treasury money?
Well, it's possible that the Fed can assist, but actually most of this is going to be on the taxpayers' back because remember, these loans are really grants as long as small and mid-sized firms don't lay off their workers. So I think Congress will have to augment that support in future bills. But frankly, the Treasury Department and the SBA are going to have to redouble their efforts right now to make the program work for banks and borrowers. They're not where they should be.
Glenn, it's pretty incredible when we talk about the rate of news flow. I remember waking up on New Year's Day and we were all concerned about rising deficits. Is it correct in thinking that during these times of crisis, we don't care about deficits anymore?
I don't think it's don't care, but you have to put them in perspective. I think of the great analogy here as more like war. We have to do what it takes to win this. It's a one-time increase in government debt, and like a war, future growth whittles down that debt. What the goal is to make sure that we're not wasteful, and I think focusing on keeping people in their jobs isn't wasteful at all. And we need to make sure we don't let this become an occasion to create all new programs going forward. But I don't have a problem with the kind of one-time spending that President Trump and the Congress have done.
We got only about a minute left, Glenn, but I'm wondering if you have given any thought to what this economy is going to look like when this is over. Are we going to see something completely different?
Well, I think it may take some time, even when the shutdown ends, for people to be comfortable in the travel and hospitality space. We may also see changes in the way work gets conducted, education gets conducted, meetings get conducted. We'll have to see. A lot of that's going to depend on how long this shutdown is, and hopefully not so long.
Yeah, hopefully not so long for everyone involved. Our thank you there to Glenn Hubbard of Columbia University, and he is a regular contributor to Bloomberg Wall Street Week. It also airs 6 p.m. Eastern tonight on Bloomberg Television and Radio. And coming up, Balance of Power continues on Bloomberg Radio. David Weston will be back with you then. We sure did miss him this hour. He will be speaking with Labor Secretary Eugene Scalia. This is Balance of Power here on Bloomberg TV and Radio.
Yet another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Even in a circumstance where you're down 80% of the rest of the year, we're still going to have $4 billion of cash. We're going to have access to a $2 billion revolver. We think it's highly, highly, highly unlikely, but we are planning for the worst case.
It is 1 p.m. in New York, 6 p.m. in London, and 1 a.m. in Hong Kong. I'm Bonnie Quinn. Welcome to Bloomberg Markets. This hour, you're going to be hearing from three notable voices on the current state of the economy. First, we have U.S. Labor Secretary Eugene Scalia speaking about today's jobs report. A little later, Tom Barkin, president of the Richmond Federal Reserve Bank, will be talking to our own Michael McKee. And then I'll be speaking with Tom Colicchio, founder of Crafted Hospitality. We'll hear all about his efforts to access the PPP program today as applications open. That's all coming up in the next 60 minutes right here on Bloomberg Television. But first of all, let's bring in Taylor Riggs for a look at the markets this jobs day. Taylor.
Bonnie, we were hovering between some gains and losses here, and then it certainly looked like after that worse than expected jobs report this morning, we are hovering still now down near the lows of the session. We're also taking a look at how the major averages are comparing relative to the Russell 2000. The Russell 2000, those are those small cap stocks, really insulated, really highly dependent on the U.S. economy. Those are off the most, off now down about 3.5% or so. Small caps are officially now underperforming for the fifth time in 6 days. Again, all on a lot of concerns here really about the strength, or the lack of strength, I should say, here within the U.S. economy. I do want to take a look at the VIX, because if there is any bright spot that's going on, it is that the VIX is hovering below 50. It's really the first time now going back since March 11th. So it does look like there could be a little bit of an improvement here. Certainly feels better than the height of an 80 handle that we had on the VIX. We do start to get a little bit more comforted when the VIX is falling along with the S&P 500. Traders really hoping to find a floor here. And so you are seeing the VIX fall there just a little bit again today. I want to flip up the board, though, if we want to end on a light note, Bonnie, because that's something that we are trying to do here every once in a while. It is all about what you're doing if you're working from home. Apparently, it looks like we are going to be drinking. You are seeing a lot of alcohol purchases, as you can see there. Sales now increasing. This is the week for March 21st. Spirits and wine are up the most, 66 and 75%. Beer increasing just a little bit less than that, or so, 42% or so, Bonnie.
All right, Taylor Riggs, thank you for that update on the markets. This, of course, following that dismal jobs report, 701,000 jobs lost in the month of March, and we weren't even anticipating that it would be so dismal for that particular month, because, of course, it was just the first 2 weeks that were counted. We're expecting millions and millions in the April jobs number. The market then didn't react as you might expect to see just that kind of a number, but obviously the market was also expecting this kind of ramp up in joblessness. We'll hear later on from somebody who has been attempting to access the PPP program. The first day of applications open today, and that is Chef Tom Colicchio, who will join us. Now, though, let's get back to the jobs report. My colleague David Weston joining us with the Labour Secretary. David.
From New York to our TV and radio audiences worldwide, welcome to Bloomberg Balance of Power. I'm David Weston. The United States, as we just heard, lost over 700,000 jobs last month. This is even as the federal government races to get cash out to employers and employees alike, trying to blunt the pain. Welcome now the Secretary of the Department of Labor, Eugene Scalia, back to Bloomberg. Thank you, Mr. Secretary, for joining us. Give us your initial reaction to these numbers. They are even worse than expected, over 700,000 lost.
David, it's good to be back with you. And the numbers that we see today and the numbers that we saw yesterday also really reflect the impact on working Americans of the public health decisions we're having to make to put our economy in large parts of the country on pause for a while. And so, yes, a loss of 700,000 payroll jobs in a month is very steep, and it's important to know, too, that this is just the beginning of the cut in jobs, because the survey we do just captures the first half of the month, really. This is that was when job losses were just beginning. We know it got steeper as March went on, unfortunately.
And this comes on the heels of 10 million people filing jobless claims over the last 2 weeks, as it were. We have economists now predicting that we could have as many as 20 people unemployed before we hit the nadir. Is that consistent with what you're seeing?
David, I'm going to refrain from giving a sort of a precise guess where we may land. Let me emphasize a couple things. First, we know that we're going to continue to see substantial numbers of people filing for unemployment, and we're going to see some more significant job loss numbers in our next month's report. It's just part of the strategy that's been adopted as a matter of public health. The second point I'd make is that the cause of this is very different than the cause of job losses we've seen in the past. This is a purposeful short-term strategy, and that gives me some optimism for how we come out of this. We came into it quickly. I think if we're disciplined on public health measures right now, we can get out of this quickly.
I certainly want to talk about getting out of it. All of us want to get out of it, no question. But before we do that, the numbers we've seen so far, what sectors are particularly hard hit? Is it restaurants? Is it small businesses? Can you tell?
We don't have full information on that yet, David. It's a great question. What caught my attention in the jobs report we just put out today was there was a very large impact on what we call food services and drinking establishments, restaurants and bars, right? And so there were 700,000 jobs lost in March, and about 415,000 of those were restaurants and drinking establishments. And of course, we remember early on, one of the first firm messages from public health authorities was avoid those places. And so there was a very quick impact there. We did not see a large impact in the reported March numbers in the travel industry, but we know that there's been a major impact there too. So this is still unfolding, and we're certainly mindful it's having a great impact on many Americans. Of course, the president has now signed 3 major pieces of legislation to help people as we work to pull through this.
Exactly. So let's talk about those 3 major pieces of legislation that we hope that it will either turn things around or at least to blunt some of the pain, as I say, and particularly some of the loans to small businesses. As I understand it, today is the day that small businesses can apply. Are we up and running? Do we have a sense of what sort of level of applications are coming in?
And just to elaborate a little bit on those loans, David, because I agree with you that it's a really important part of the relief package that has been put out. These loans to small businesses, and there's $350 billion that's been made available, are intended to help these small companies get through the next couple of months by giving forgivable loans to cover utilities and other costs, and then most importantly, from my perspective, to cover payroll too. And if workers are kept on payroll during this period, these loans are largely forgivable. So it's a way to bridge companies through, but also to bridge employees through by keeping them on payroll rather than on the unemployment rolls. It went live today. There are, as I understand it, applications are coming in. I believe some loans have already been dispersed. It's intended to be a very simplified process. Today's the first day, and I think we'll see greater uptake as we get into next week.
As I understand it, and please correct me, Mr. Secretary, if I'm wrong, these loans, 75% of them are supposed to go for employment, for payroll, in fact, if they are to be forgiven. Do you have some hopes that this might not only reduce the number of people being laid off going forward, but some people might hire back?
Well, yes. And actually, companies that already let people go and want to take these loans can get the sort of full credit for their payroll by bringing people back. And they should know that small companies that recently let people go because of the virus can bring them back on and have the loan cover their payroll. And David, yes, I very much agree that the aim here is to keep that tie between employer and employee during this pause that we have in our economy. As I said, we came into this sharp downturn very differently than we've come into others. It didn't result from economic conditions. It resulted from a very serious health problem we're dealing with. I think we have a better chance of coming out very quickly if we use measures like this. Of course, the legislation the president signed also includes very high unemployment insurance payments to make people whole so that they're not left losing out significantly financially because of conditions that result from no fault of their own, but rather from, again, public safety health measures we're taking. So there are other important things in there, too, including paid leave provisions, which we just started implementing at the Labor Department earlier this week.
And just in closing here, give us a longer-term perspective, Mr. Secretary, if you can. What longer-term effects there might be on the labor market of this? We hope it's going to bounce back, but might it change people's attitudes, employers' attitudes, employees' attitudes going forward? This is a rather traumatic experience for all of us.
Well, let me emphasize first how important it is to follow the public safety, the public health measures that are being urged on us. Discipline now in staying at home, social distancing and the like, is going to help people get back to work and fix the economy more quickly. In terms of long-term changes, David, we'll see. Attitudes toward telework may change. We'll see. Now, I don't know whether they'll get more positive or more negative, but we'll see. But I think the long-term impacts will be less, needless to say, if this pause is shorter. I think the longer it drifts, then the more substantial the long-term impacts on our economy will be, and I don't think that will be for the better.
And we certainly hope that will come back quickly, as you suggest. Thank you so much, sir. That's the Labor Secretary, Eugene Scalia, joining us. And now we are going to go to Governor Phil Murphy of the state of New Jersey. He every day gives a brief...
We're going to pop out there and say thank you to my colleague David Weston and, of course, the U.S. Labor Secretary Eugene Scalia. Coming up next, you're going to be hearing from the Richmond Fed President, Tom Barkin. This is Bloomberg.
the opportunity, we were able to give a big push to develop our catering business. So that is something that we think we'll continue to work on.
Welcome back to our viewers and listeners around the world on Bloomberg Television and Radio. I'm Michael McKee, Bloomberg's international economics and policy correspondent. Joining me now, Thomas Barkin. He is president of the Federal Reserve Bank of Richmond. And thank you very much, Tom, for joining us today. I'd like to start with the number of the day, 701,000 jobs lost in the month of March, more than we expected. But did you really learn anything from that?
No, it is a sad day. We'd had job growth for, well over a decade, and it's hard to see the numbers turn negative. But I think everyone expects a very serious downward tilt on the job side, and this is just the first indicator. If you look at initial unemployment claims for the last 2 weeks, the highest ever had been 700,000 in 1982. Last week was 3.3 million. This week was 6.6 million. So unfortunately, I think the employment numbers are going to get worse before they get better.
Yeah, I'm getting forecasts in from some economists that suggest in April we'd see anywhere from 10 to 20 million jobs lost. Does that seem crazy to you? Does the Bank of Richmond have any kind of forecast at this point?
Well, this is so unprecedented, I think. Point forecasting is a pretty silly thing to try to do. But what I do try to do is just look at the numbers just to get some perspective on it. Restaurants and bars in this country employ about 12 million people. Physical retail, excluding food and drug, another 11. Travel and entertainment, another 5. So even in those 3 sectors, which have been hit unbelievably hard, you can get to 30 million pretty quickly. So I don't think numbers like 10 or 20 million are out of the pale.
Well, at this point, what are CEOs, what are mom and pop stores telling you in your district about the conditions they see?
Well, I divide the companies into 3 buckets. There are service industries, like the ones I was just talking about. There's a lot of emotion there. In a lot of cases, really good, viable businesses have been shut down in the pursuit of a public health solution. And they have hope. In particular, a number of them are in the process of applying to this new small business loan program. But they don't know for sure whether they're going to get the money, and they don't know how long this is going to last and whether the money will bridge them. So there's a lot of sadness there, a lot of emotion in that sector. Then I'd say there are a bunch of essential industries. We have a cash processing operation, but you put hospitals and food processing and fire and safety and the like. They're proud that they are essential to making this country operate, but they're nervous. They're nervous about their health. You do see increased absenteeism. You see some supply chain issues in those places. They know they need to deliver, but they're nervous. And then there's the wide swath of other businesses in this country, construction, manufacturing. Many of them are down, but they're still hopeful. They are seeing drops in demand, but they're making their best efforts to weather through it. And they just have hope that there's light at the end of the tunnel here.
Well, this all adds new urgency to the effort to get loans, to get operating capital to companies. How fast is the Fed going to be able to stand up the Main Street lending program? When can you start lending to people who need the money?
Well, we want to achieve the goals of this legislation, which is put a lot of money behind supporting the economy and businesses in need. It will just take time to work the details with Treasury, who is our co-sponsor on this. And as you can see with the small loans, the SBA program that's just got announced, a lot of the devil's in the details. It's just complicated to get right. It's complicated to pick out the right segment so you get money to the people who truly are in need. It's challenging to define the vehicles and the instruments, and then, of course, how much risk you want to bear. So we're working hard, and we're trying to get it out as fast as we can.
I'm glad you brought up the risk question, because there are people who say, you know, the federal legislation says no buybacks, no dividends, no big raises for CEOs, but there are reports that the Fed doesn't think that's going to necessarily apply to them, that if you put those strictures on, companies might not apply for loans, which would be worse because then they might have trouble keeping people on payrolls. How do you feel about that?
Well, I just say all this stuff is being worked together with Treasury, and give us a little bit of time to try to land the parameters of this.
Another question about it in terms of lending. There is a group of people, a group of companies arguing that you don't take anything less than investment grade now, but you need to, because you look at companies like Macy's, junk rated, but they lay off 130,000 people. Would you be open to going below investment grade in your lending, in your corporate bond buying, if it helps keep the economy going?
As you know, in the world that we, I guess, own under the statutes, we're not allowed to take that kind of risk. A program that we put together with Treasury it has to make that decision, as I talked about earlier. And the trade-offs on that, Michael. It's just a challenging one to try to get right. And like I said, give us a little bit of time to try to land the plane on that.
Well, I've got another one that you may have the same answer to, but let me try here. Nancy Pelosi, the Speaker of the House, Maxine Waters, head of the Financial Services Committee in the House, have both written to Fed officials saying you need to start buying munis because we need to bail out our states and cities that have no money coming in because nobody's spending anything. Do you think that the Fed can or should expand what it's doing in the municipal market, or is the facility that you've got already going to be as far as you can go?
Well, the legislation gives us the authority to buy short-term munis, and so that is, you asked the question whether we can, that is something we could do. The legislation does ask as part of this fund that we support the municipal market, and that's, of course, something we're trying to look at. How would you design something that would achieve the aim? I think all the facilities we're standing up, the real challenge here is how do you use the tools that we're given and the constraints that we have legislatively to put the right kind of money in the hands of the right kind of people. And I think the municipal market is challenging to the extent that it's got liquidity issues. That does seem to fit more the sort of facility we've had earlier. But if this is a funding issue alone, then that's probably more of a fiscal question than it is for our tools. But we'll just have to figure that out.
Well, speaking of the tools you have available, you're going to have billions of dollars in loans out to companies at basically a zero rate or just above it. Can you ever raise rates at this point, given the threat that would provide to the people who have the loans you give?
Well, rates are low now, and if you read the last statement, you'll get the sense that they'll be low for some time until the economy recovers. But speaking for myself, I do think that we will want to normalize rates at some point when the economy's recovered. I think that's actually good for the economy. I don't think it's healthy to be at zero forever. And when the time is right, I'm sure we'll be willing to do that.
Got about 1 minute left, so let me ask you something about your area of expertise, which is corporate management. What advice do you have to someone who's running a major corporation or who's running a restaurant these days?
Well, what I'd say is I'm actually pretty confident that when the time comes, businesses can come up with a protocol that allows their workers to get back to work safely. As I said, a number of essential businesses are doing that today. What I'm less confident in is their ability to get customers to shop again, to go to a ball game, to take a vacation, to go buy shoes at a retail store. And I think it's really important for businesses to think about how do we compel customers that it's okay to be back in our store or it's okay to take a trip. If you go to a grocery store these days, you'll be met with someone who's in a mask and who will swipe down your cart to sort of send a signal that we take cleanliness seriously. The stores aren't crowded, so there's a lot of room. You can distance. The checkout clerks have sneeze guards. There are tape on the floor. And so I think the appropriate distance in line. And I think every business needs to be thinking about in a world where we're past the peak, but of course there's still some risk of infection because this disease probably won't go away completely, how do we make it safe for customers, and how do we get customers confident that they can shop with us again? I think that's a real business imperative.
Thank you very much. Tom Barkin, he's the president of the Federal Reserve Bank of Richmond. Thanks for joining us here on Bloomberg Television and Radio. Stay with us. This is Bloomberg.
This is Bloomberg Markets. I'm Bonnie Quinn. Let's get a quick check on markets now as the major indices continue to edge lower. The S&P 500 down a full 2% at this point. All of the groups are in the negative. The Dow is also down almost 2%, as is the NASDAQ. You can see crude oil no let up in sight there, 27.10 for a barrel of WTI. Coming up, we're going to be speaking with Tom Colicchio of Crafted Hospitality. You know him as the employer of nearly 300 people. The first day of the PPP by the SBA, was he able to apply? What was the process like? We'll be speaking to him about that and lots more next. This is Bloomberg.
Melinda Gates, thank you so much for joining us on Bloomberg Studio 1.0.
Who shaped my views were the women I talked to.
I think Facebook's how we won in a lot of ways.
Running Microsoft was a ton of fun, and it was, it's kind of inspirational.
This is your weekly review of the most important business news and interviews from Bloomberg Television around the world.
I hope that banks will follow, and we have seen other banks following the ECB recommendation this morning. Besides UniCredit, I think it's important for banks to be here to support the economy. Banks are part of the solution.
From Bloomberg World Headquarters in New York, I'm Vonnie Quinn. Welcome to Bloomberg Markets. Here are the top stories we are following from around the world. Global markets sinking deeper, at least for equities, with the S&P 500 extending losses from Thursday, now poised to close lower for the third time in 4 days. This as employment in the United States plummets. Payrolls sinking 701,000 in the month of March, falling for the first time since the Great Recession. The unemployment rate rising at its fastest pace since 1975. The coronavirus, of course, to blame as it rips right through not just people but the economy. Confirmed cases of the virus now top 1 million worldwide. More than a quarter of the infections are in the United States, with New York City and state now the epicenter of the crisis. New York State recorded its biggest daily jump in deaths and hospitalizations to date. All of that in the next 30 minutes. So let's get a check now on those markets. The S&P 500, Dow and Nasdaq both down at least 2%. The S&P down even more than that. Raytheon, the worst performer, down 43%. After the jobs report, the 10-year yield is at 58 basis points. It's been pretty stable most of the day. Crude oil waiting for the next step from OPEC Plus and the United States. It's trading at 27.02 here in the US, and the dollar index continues to strengthen. Let's check in now on the Bloomberg First Word News. Mark Crumpton has that.
Vonnie, thank you. Japan is bracing for what officials fear will be an explosive surge in coronavirus cases. Confirmed cases in Japan have more than doubled in a week to almost 700. Prime Minister Shinzo Abe has come under increasing pressure to declare a state of emergency to contain the disease's spread. Abe told Parliament today the situation didn't yet warrant an emergency declaration, but said he wouldn't hesitate to do so when the time comes. It's been a week since British Prime Minister Boris Johnson tested positive for coronavirus. He still has a high temperature and remains in isolation. The Prime Minister appeared on his doorstep last night to join in a mass round of applause for healthcare workers. The British people will hear from Queen Elizabeth this weekend. Buckingham Palace says the 93-year-old Queen has recorded a rare address to the public about the coronavirus pandemic. It will be broadcast on Sunday. Apart from her annual Christmas Day message, the Queen has made only a handful of special broadcasts during her 68-year reign. She addressed the nation during the 1991 Gulf War and after the death of Princess Diana in 1997. Three-time Grammy winner Bill Withers has died. Withers wrote and sang such hits as Lean on Me and Ain't No Sunshine. His family says Withers died Monday from heart complications. Lean on Me was performed at the inaugurations of both Barack Obama and Bill Clinton. That song and Ain't No Sunshine are among Rolling Stone's list of the 500 greatest songs of all time. Bill Withers was 81 years old. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Vonnie?
All right, Mark, thank you. Well, the plunge in hiring last month, hinting at the extent of damage to the U.S. and global economies. Joining us now on the phone is Green Capital Senior Economic Advisor Conrad de Quadros. Conrad, I'm sure you may not have been anticipating just that amount of jobless this month, but we know it's coming. We know there are going to be multi-millions coming. How fast does the government need to get paychecks into their hands in order for this economy and social fabric not to fall apart?
Thanks for having me on, Vonnie. Obviously, this is being conveyed ad infinitum on various shows today, but the Mark report, it was shockingly bad, even though it covers a period that was prior to the intensification of coronavirus-related disruptions to the economy. And after that period, we know that we've had an additional 10 million people who have filed for unemployment insurance benefits. So in March, we had a 1.2 million increase in unemployment, and it boosted the unemployment rate to 4.4% from 3.5%. The last time we had that magnitude of a 1-month increase in the unemployment rate was back in December of 1953. And then, as I said, we obviously know that since the survey week for these data, things have gotten materially worse. So I think it is critical that some of these support programs for the economy are put into place quickly. I would say that it's encouraging how quickly both the fiscal authorities and the monetary authorities have moved in this episode. If we compare it to the last major crisis for the economy and markets back in 08, 09, they're moving much more quickly. But I would say that there's still some work to be done.
Yeah, absolutely. And to that end, are we going to need another disaster relief or stimulus, whichever way you want to phrase it, very soon, Conrad?
Well, I think the first thing that would be helpful is that the Fed needs to get some of these programs operational. And obviously, they're working extremely hard to get them operational. But, for example, the commercial paper funding facility, if that could get going quickly, I think that would do a lot to help funding markets. And I also think that there's other areas in the market that need support. And the Fed obviously has the firepower to provide that support with the CARES Act, which basically gives the Treasury the ability to inject a lot of equity into the SPVs that the Fed will be using to support various parts of the market. But there's some programs that have been announced, TALF, the commercial paper funding facility. It would be good to see those operational quickly. And I think that there are other areas of the market that need support. I was quite discouraged to see yesterday the stories that the regulators have decided not to move to support non-bank mortgage servicers at this point. You know, I think that that's an area of the market that needs support. Then on the fiscal side, we've also seen critical moves, critically important moves, including increased and expanded unemployment insurance. The SBA's Paycheck Protection Program is important, but those need to be, I think, available quickly. And again, another thing that I was disappointed with yesterday was seeing the reports about banks wrangling over the loan rate for these PPP loans.
Right, exactly.
They're not taking any risk with these loans, and if they don't want to work to ensure availability quickly to small businesses, these unemployment developments that we're talking about are and hoping that they'll be temporary. I mean, I think that's a key point, that the increase in unemployment, most of that came by people who believe that this unemployment is likely to be temporary. But whether or not that's temporary it obviously depends on developments with the virus. That can't be known. But it also depends on these programs that are intended to support the economy. PPP is an important one. Sorry, go ahead.
Well, that was going to be my next point, and we're going to be hearing about an actual experience in a moment from Chef Tom Colicchio. But on your point about the workplace, Conrad, will many of these jobs just go away and never come back if people don't take advantage and can't take advantage of the PPP?
Well, I think that's the risk. And as I said, if we look at the raw numbers, we had an increase in unemployment of 1.2 million, but almost all of that was among people who perceive their unemployment to be temporary. And whether or not that's temporary, I think, depends on the ability to support the companies that they were previously working at. And I think a big part of that in terms of the near-term support is the PPP.
Yeah.
So, you know, if banks are whether willing or unable to get this program up quickly and focusing upon things like the loan rate for the PPP, I mean, obviously, if this turns out not to be temporary unemployment and if it gets materially worse, then the losses that banks are going to face on their loan portfolios are going to make wrangling over PPP loan rates seem pretty silly. So, you know, I think that banks need to really focus on getting these loans done. I think something that would be really helpful, and this would be supportive to the banks too, would be that if Treasury makes it clear that $350 billion is not necessarily a cap, and we've heard that from Treasury officials, that if that is used up, they will come back and ask Congress for more, and Congress is very likely to provide that. I think that message needs to be sent so that companies don't feel like they're scrambling for a fixed amount of money, and if it runs out, they don't have access to that. And that would, I think, ease the flow of these loan applications. Exactly,
because it is first come, first served right now. Conrad, we have to leave it there, but thank you for all of your time today. That is Breeden Capital Senior Economic Advisor Conrad de Quadros. Coming up, one of those stories, top chef Tom Colicchio of Crafted Hospitality. He details how his restaurant business is being affected by the corona economic shutdown. We'll get his story next. This is Bloomberg. Bloomberg Markets, I'm Vonnie Quinn in New York. Time for your latest Bloomberg Quick Take. Millions of white-collar workers are now getting a crash course in working from home. The experience could reshape the workplace for decades to come. Before the coronavirus pandemic, about 56% of companies globally said they allowed remote work. 16% said they were fully remote. Well, in 2017 and 2018, a quarter of all employees in the US worked at home occasionally. People who trade stocks, bonds and currencies, though, face myriad issues. Some home computers and residential internet services cannot handle the huge amounts of data needed. Plus, working remotely raises compliance concerns. JP Morgan, for example, has split up teams. Some work at home, some are on backup trading floors. Employers who have a good experience with working remotely may decide, though, that offices could shrink, and that would reduce overhead at a time of US economic uncertainty. Reductions in office space would depress the commercial real estate market, and that's just one of the ramifications. That's your Bloomberg Quick Take. Now, America's restaurant industry in crisis mode as stay-at-home orders have forced establishments to rely solely on delivery and on takeout. Let's get to our next guest now, who has been vocal on this. He started Crafted Hospitality back in 2001. It grew to 7 restaurants, from Craft New York and Los Angeles to Tom Colicchio's Heritage Steak in Las Vegas and Witchcraft, of course. Let's bring him in now, Tom Colicchio. Chef Tom, thank you for joining. And I know that you were very vocal about the difficulties of applying for the PPP. You're trying to keep on as many of your 300 workers as possible, and it's been devastating. What was your experience today with the PPP program?
Yeah, sure. Thanks for having me. To be clear, I had to lay off over 400 employees. I do have a senior group that I'm still trying to keep employed at this point. The problem so far with PPP, we're ready to apply. Our bank that we use in New York, that's a reputable bank, they are telling me that they don't have the proper guidance from Treasury right now to make these loans. They're concerned that because of the lack of guidance, that it leaves them open to not being able to properly process the loans, and then possibly having, legal issues around it as well. So they're still waiting for guidance. I had asked them if the guidance that they received late last night, if that helped, and they said they're not there yet. The problem I have then is I can't go to another bank that I'm currently not banking with to apply. So I'm kind of stuck between a rock and a hard place.
Right.
That and there's also, I was listening to you. Okay.
Continue, sorry.
Okay, also, I was listening to your previous guest, and there's a lot of problems with PPP in the way it's set up. I mean, for instance, it pays for 2 months of payroll and rent, except that I'm not going to be open in 2 months. And the date of origin is when you actually, it seems as if it's when you apply for the loan. And so if I had to hire my staff back, number one, unemployment is so generous right now, it would be very difficult for me to hire back 90% of my staff. Number two, if I did, I'm not going to be open in 2 months. So I'll be out of money before I even get open. That's one problem. The other problem, now, they can fix that, and I hear there are fixes on the way. They can add additional, 2 months to that. They can actually move the date of origin back and treat it more like a line of credit. So when I start drawing down on it, that's when I have to actually bring 90% of my staff back. The other problem is that restaurants, in my case alone, I have my AP in just 4 of my restaurants, or 5 of my restaurants, is at about, $1.5 million. And so even before I open up, I'm going to have to somehow pay that. And, I just don't have the capital to do that. And then on an ongoing basis, I don't think the restaurant industry is going to get back to normal, at least until we find a vaccine. So that's at least a year and 4 months away. And so there's going to be a period of time where we're operating at maybe 40% at best, that the restaurants can't survive on that. So we're going to need significant runway to keep our businesses open, number one, to keep people employed, and number two, it's not going to help anybody if we open up and a month later we have to shut down and those jobs are all gone again.
Tom, what kind of alternative future are you planning for? Because it sounds like there are so many problems now, and I think you're right. There's no guarantee that in 2 months' time even, or even in 4 months' time, that everything is going to be back to full capacity.
There's no way it's going to be. I'm listening to reports now saying that this may ebb in the summer, and it's going to come back really bad again in the fall. It's going to move to the southern hemisphere, and it's going to come right back here in the fall. And then we're looking at 6 months of it. And so I'm not looking to, we're not going to find normalcy, number one, until we get antibody tests. We have testing to see who actually has it, actually who's had it, and then a vaccine. And so I don't see the restaurant industry getting back to normal for quite some time. And so the question is whether or not the government is going to backstop these restaurants. So we're here. And the question is how robust do you want unemployment to be, and how long, or do you want to just pay people through the businesses so we can actually continue to pay people even though we're at 25% capacity?
Right, exactly. The point, and our previous guest laid it out, is that you want to keep people on the payrolls even if they're not sort of coming into work every day, so that you don't have to start from scratch, right? A 19-year business that you've built up. So, Tom, what is your advice for people that maybe aren't as hefty as you when it comes to being in their industry, one of the top in their industry? I mean, hopefully you and colleagues and other restaurateurs in the IRC will be able to sort of convince the government to do something else for that part of the industry. But what about others, Tom? What about the ones that aren't, as I say, hefty enough to do that?
Well, the IRC, the Independent Restaurant Coalition, that is about 3 weeks old right now. We managed to get some funding. We hired lobbyists who are working on our behalf. We hired a comms team. We're working on behalf of every independent restaurant. We have people in our coalition that have 22 seats. We have other restaurant groups that have 20 restaurants. But we're fighting for everybody. Whatever we manage to make work for our industry will work for the entire industry. So my suggestion to anybody out there right now who is maybe listening to this and doesn't quite understand how PPP works, are several other either loans or grants that you can tap into, whether they're federal or local. Work with your accountants, work with your attorneys, work with your banks.
It sounds, Tom, like you're not. Sorry, go on.
Go ahead.
I was just going to say, it sounds like you're not really blaming the banks yet. I mean, we've been talking about how the interest rate had to get upped in order to give them more of an incentive to get on this fast and make something for themselves, right? But you said that it's not just the banks, it's the SBA, and it's just the whole process.
Yeah, but this isn't the bank. My banker, who I've had a 20-year relationship with, wants to service me, wants to service his clients. He is just not getting good information from the Treasury to make an informed decision as to how the mechanics of this even works. There's so many questions that are open. For instance, again, just asking a question about the date of origin completely changes what I'm doing. If I knew, because I heard you talk about this with your previous guest, that right now we're talking about $360 billion, so that's going to run out very quickly. If I knew that there was additional money coming in behind this, then I know immediately I would try to hire back my staff. The other thing that's up in the air right now is you can use this for benefits. So the question I have, let's just say in theory, I paid 40% of my employees' benefits, right?
Yep.
If they're employed, can I use that money to pay 100% of their medical benefits? That would be an incentive for them to get off unemployment and come work with me. Even though we're not open, that's fine. They'll come, they'll still get benefits because right now our health benefits are attached to employment. And so that would be one incentive. If we got that understanding that I can do that, it would make it would change the calculus on this. If I knew that there was an additional 2 months behind this, it would change the calculus on this.